which is making it all the way to the closing. So specifically the chapter, or I'm sorry, did I introduce myself? My name is Robin Butler Connor. I'm the managing broker at Keller Williams Elite in Oak Lawn. I've been in real estate for 18 years. I primarily concentrate with seniors, international transactions from Mexico and the Caribbean. So I do a lot of referrals there, and divorces, trust, estates, wills, things like that. Those are the most exciting things for me to participate in. And now that's pretty much my background in real estate. Back to bulletproofing the transaction. If you guys are following along on your guidebook, the first one starts with perspective, but I'm going to talk about just bulletproofing the transactions in general first. Contracts, once you go under contract to close, I believe that bulletproofing the transaction starts a little bit before that as well too. Bulletproofing the transaction means that you are aware of any potential issues that may come up along the way during the transaction process. And that is everything from the time you go under contract, attorney review, inspections, appraisals, financing, to closing. And that's what we're going to cover today. If you are reading about bulletproofing the transactions in the book, it starts at page 241 in your shift book. And the first quote on that page is from Abraham Lincoln, and it says, "If I had 8 hours to chop down a tree, I'd spend 6 sharpening my axe." And I like our sessions to be interactive, so I encourage anyone to unmute themselves and ask a question at any particular time. But I wanted you to think about, what does that mean? The 6 hours of sharpening your axe when you have 8 hours to chop down a tree. Like, we know that there is a shift currently happening, and what do we need to do as real estate agents to be ready to participate in that at a high level and be successful? That to me means that we need to sharpen our skills, specifically our salesperson skills, some of the things that we may have taken for granted and not actually had to utilize at a high level, okay? So the main idea for bulletproofing the transaction, which is your perspective, the inspections and repairs, the appraisals, a loan approval and funding, the other contingencies, your co-op and communication, deadlines, and bulletproofing strategies that can be utilized, okay? So perspective, which is page 7, if you're following along in your workbook, what is the perspective on bulletproofing your transaction? So what that really means is something that we covered earlier in the book in finding the motivated versus finding those who just want something. That would be where I would start. So it starts with finding a motivated buyer. Motivated buyers need to buy. Motivated sellers need to sell versus buyers who want to sell and buyers who and sellers who want to sell. Because a buyer who only wants to do something, or a seller who just wants to do something and doesn't need to do anything, well, they can kind of fall out or shake out a little bit in an environment that may be scary, like this one is. So we've already had stories of agents who buyers have just left the table. I mean, just totally left it. They were clear to close and just left because they were scared. And so part of getting your buyer or your seller ready for this kind of market is sharpening your salesperson skills and what you're saying to your buyer and or your seller. So in a lot of cases, an owner may feel like they're selling too low, or a buyer may feel like they're paying too much for a property. And if you have done all of the work that you were supposed to do in the beginning to avoid that fallout, or reassure them like with your CMAs, then this is something you can be proactive about, knowing that these are thoughts that may be going through someone's mind. So that here it says the challenges in this market, a yes on a contract is not as solid as a yes in another market. Well, it can be, especially if they need to sell or if they need to buy. It can be. So to be ready for the solutions that you're going to experience and are already experiencing in a lot of cases, is to be aware of the most common problems and have good solutions and scripts. We have some great scripts and solutions right here in our workbook to go over. And then avoid problems by addressing the common concerns before they arise. So maintain good and frequent communications with all parties so you become aware of the problem as early as possible. So keeping the transaction together is really about managing a seller's expectations, managing a buyer's expectations from the very beginning. So in a shifting market, you have to be a firefighter, a therapist, a counselor, a consultant, because we are that anyway. We do that all the time anyway. It's just expected for pretty much every transaction. As the market shifts down, sales skills need to shift up. And we're salespeople, so you're going to be selling what is happening and occurring throughout the process. As we go through these strategies, it's really going to highlight what we're supposed to do anyway. And these tactics just essentially expose what we aren't doing or have taken for granted when the market is easy to get business. So you need to be more than just a lead generator. Keeping a transaction together, again, is about managing expectations. I think you've seen this slide several times as we have been teaching the Shift book. I'm hoping everyone is an explorer in this experience and would like to have this more in a discussion fashion, to ask some questions, throw in some ideas, some thoughts, some experiences as well, so that everybody can get a lot out of today's presentation on bulletproofing the transaction. So the 5 common problem areas during a shifting market are buyer's remorse. There's inspections and repairs. There are appraisals, loan approval and funding, and communication. If you just think about all those things, even when everything is gravy and good, there's still some breakdown that can happen in each of those areas of a transaction. So let's focus on buyer's remorse first. For our buyer's remorse, you have to be proactive when you're talking to your buyers. So buyers don't buy every day, and keep that in mind. This is what you do on a daily basis. It's not what they do every day. They are going to have some doubts and uncertainty anyway. And in a shifted market, fear enters the picture, and buyers are afraid of making a mistake. So your job is to help your buyers stay focused on the house they love instead of the purchase process. And one of the skills you can improve upon in making sure that that happens is your skills to be the economist of choice. So knowing your market, being very educated about your market more than ever before. What's the inventory like? What are the interest rates like? The expectation is that in this market, as the market shifts, we're going to lose a significant amount of agents. And so the agents that have thrived and survived, like from the last market shift, I was able to be a a participant, I should say, unwilling participant in the last market shift. And the agents who survived that were those who were the most skilled, who actually increased their level of professionalism and education about what was going on in the market, okay? So being proactive with your buyer is, again, if you did a very thorough buyer's consultation, which we already have, everything that we need to know already scripted for us to find out what we need to do in interviewing our buyers and what they want, to remind them about what is it that they want to achieve, and then setting their expectations about realistically what do they need to consider. And then prepare for some alternatives about what to do if something happens, you know, in the transaction, or you discover something else about a house. So you have to have those conversations up front, and you have to reassure your buyers along the way, especially when they go under contract. You know, just saying, hey, you got the contract, you know, that was good before. Now you need to reassure them that they made a great choice and that was a great decision. And, you know, you're looking forward to how things are, what's going to happen next, basically. So make sure you cover what's going to happen next. So buyers are exposed like we all are right now. We're sitting at home. Everybody's in front of the TV, and there are news reports constantly about what's bad happening, what the market is doing, stock market is doing, what the unemployment rates look like. I even had phone calls from, let's see, relatives of a relative who says, hey, I hope you're not buying anything or buying a house or doing anything like that. And your buyers are going to have those same kind of phone calls, conversations with people, and you need to know that that's going to happen and prepare them for those so that you can reassure them, especially with the CMA that you may have prepared for them and given them, and everything that you've talked about and all the houses that you've looked at, that they are more knowledgeable about the market than any of their well-meaning family members or friends. So those are kind of conversations you need to have with your buyers on a regular basis, especially about this buyer's remorse. When the buyer goes under contract, this is saying provide an antidote for buyer's remorse, mark the moment. So one of the things that you can do is if you did your buyer's consultation, go back over all the things that they said that they wanted, why they wanted it, and then mark off why this property was such a great property for them to find and go under contract for. You can even write it down is what a suggestion is, and send that over to them so they can have that as a reminder, a written reminder in front of them all the time. And the other suggestion is to also close the deal faster than you normally would. So talk to everybody, especially the lender, to see how quickly can we get this to closing so that the time frame isn't dragged out for people to, I guess, think even longer is the best way I could say that about purchasing their property. Okay. So here's the marking the moment, just an example there on that slide of writing down what was great about the house and why this was the one. And what I was talking about is like your sales skills and constantly reselling the buyer on their decision, okay? So sellers also have remorse too, if they think that they sold it too low. And the seller's remorse is, one, you should have done a CMA for them as well. And then remind sellers of their motivation to move. So again, your listing appointment with your sellers, you would have gone over all of these questions, already scripted for you, didn't have to even think about it, to find out what their motivation is for moving and where they're going, when they need to be there, and how this transaction currently is going to get them there. Because in most cases, people don't want to start over. So seller's remorse is really important as well too, especially as we go through the process. If you have already been proactive and talked to them about what's next, we're under contract, now what's next, the home inspection, and you talk through that. We're going to go over it in detail on the next slides. But those are the things that you need to prepare for both sides of the transaction. Again, closing as soon as possible and reducing the time that buyers and sellers have to second guess their decision. That's important. So stay in constant communication, whichever side of the transaction you're on. If you're on both ends, you have to still be in constant communication with both sides of the transaction. I would say that your frequency of communication should definitely increase in a shifted market. And inspecting their expectations. So if you're constantly talking about what's next with them and what to expect, one, because you want them to have some reasonable expectations, and be ready to problem solve. So I like contract to close checklist. I use those quite a bit. And so much so that those task lists are in command as a task to check off of each point in the transaction, okay, as you move through the stages.
That's a good point, Robin, on the checklist.
Mm-hmm.
You know, if you're using command, not just a task list, but in opportunities, if you're using it the right way, you create, each stage will have its own task. So you make sure you go through every stage and make sure you checked off everything that you need to do so that you bulletproof a transaction. So you could technically have one as you cultivate, as you make an appointment, and once you go into contracts, you can make sure that you have everything lined up for that transaction.
I agree. I have one that actually works exactly that way too. For every stage, there is a task and a checklist that you can add in as your task so that you can check it off. And, you know, sometimes we're lazy about doing those things, but in a shifted market, that's exactly what you need to do. You need to overdo everything and make sure you check hit each and every point, I should say. Okay. Thanks, Ubaldo. So the next step in the transaction is the actual inspection and repair, okay? So if you're following along, that's on page 19 in your workbooks. So your conversations with your sellers on inspection and repair, super important. So you have to prepare your sellers for what to expect in the market. So right now, we have a limited inventory, and buyers can buy because interest rates are great. And your sellers need to know what to expect in their inspection. So we know that during inspection, a buyer's going to find something because there isn't a perfect house, okay? And you have to acknowledge their feelings and their concerns throughout the process. And ask sellers if they're willing to risk losing a buyer over something that may be minor. Even to the point that you may suggest a pre-inspection to prevent an unexpected repair request. So I currently have a transaction going on, and we provided the buyer with an inspection already. One, because the property is a tenant-occupied property and they won't be able to access it and get into the property because of COVID-19. So we already gave them the inspection report that we were able to have the property inspected prior to, and they're working off of that, and it's working really, really well. So a pre-inspection may work really well when a buyer cannot access an occupied property, especially something that may be a tenant-occupied property versus owner-occupied, because owners might be able to leave the house, maybe not, you know, it depends on what type of owner it is. And I've been suggesting that with other sellers, and I know other agents are having some success with doing pre-inspections just so that people don't have to actually come into the house, and buyers are receptive to it, okay? So with your buyers, it's really important that you recommend inspectors that you trust. Always, to me, you need to have your allied resources and your allied partners for every step of the transaction. So who is your inspector, and is that buyer utilizing your inspectors or their inspector? Makes a huge difference. And educate your buyers about where you are in the process and what comes next. So we have a buyer's guide. The buyer's guide is in Command, a very wonderful professional looking buyer's guide that goes over the steps of the buying process. And you would sit down and have these conversations, or Zoom, I'm sorry, because you might not sit down with them now, Zoom conversation with your buyer to explain to them what to expect in just an overview of the buying process through this, okay? And so remind them also, again, there isn't a perfect house. Not even the house you build from scratch is going to be perfect. And the job of the inspector is to document every single thing that they see wrong with the house or that could potentially be wrong with the house. And that your job as the real estate agent is to focus them on the big picture items. So the things per contract that say we can address electrical, plumbing, heating, cooling, structural, roof, you know, not something that costs $2 or $10 to do, you know. So sometimes buyers get lost in those things and they're very minor things. And so you have to make sure they stay focused on what's really, really important in the inspection process. Attending the inspection. So to me, that's like a no-brainer to attend the inspection. Right now in the current climate, you might not be able to attend the inspection. Currently, the inspection companies are saying, hey, we don't want anybody present because we're practicing social distancing and we don't want to endanger the health of our inspectors. So we have a lot of inspection companies that may not want anyone present besides the inspector, and that is happening. So that's really, really important that I have an inspector there that I trust. Because then I know whatever it is that they're putting in their report and how they actually are talking to me and or my client about the inspection report will come off in a way that I think is acceptable or works with my business practices. So the reason why we go to the inspections in the first place is so that we can answer our customers' questions. I like to go because I like to know what really is a big issue and what's a small issue, because sometimes when you're reading the inspection report, something small comes off as big when it's really not. And if you were there, you would know, oh, that's just a simple fix, nothing really serious. And you also want to know what's on your customer's mind. So I just had an inspection, was that last week or earlier this week? I don't remember. But the customer was not able to attend mainly because the inspection company wanted to have as few people there as possible. And so as they finished sections of the house, because I also wasn't supposed to be in at the same time, then I just asked for reports and updates about what was happening and what was going on, just so I could understand it as it was happening and talking to the client at the same time. And that really helped, you know, this client mitigate things that they thought were really big issues that really turned out to be not much of anything. And I was also there with a camera in my video and all the other things that were necessary to alleviate any kind of stress or strain that they had by not being able to be there. And you should always have your referrals, your trusted allied partners to refer to your clients. I don't usually use the word vendor. I know it says vendor here. I just don't like that word. So you have your partners to refer to your clients so they can have the best experience possible when purchasing a property. And then your buyer guides, which we talked about as well too. Okay, so everything that you can do to make sure that the inspection doesn't become a reason to come out of the contract or get out of the contract. And then about negotiating and repair. So when you're talking to your buyers and you're saying, okay, so we're having this inspection, this is what's going to come up. There are going to be some things found, and this is what's going to happen as a result of that. There's a couple of things that can occur. We can either ask the seller to repair these things, we can ask the seller for credit for these things, or maybe we might renegotiate the price. Because we're kind of renegotiating or negotiating all along the way in a lot of transactions. The purchase price on the contract is just the first negotiation. You know that we're going to have some negotiations based upon repairs in most cases, and you're expecting it. So explain it to your buyer, explain it to your seller, let them know. Find out how much the repairs will cost, and enlist the other agent as your ally. So I always make sure that I reach out to the other agent on a deal to, one, introduce myself, get a feel for who they are, what kind of agent they are, so I know whether or not I'm going to have to help them or can they hold their own on their side as well too. And then especially like the repair costs, you should have a good idea about how much repairs cost yourself too, and or your inspector, or you have, again, those allied partners that you can call and find out how much things are going to cost. When I have an inspection, sometimes if I know right off what's wrong, I've taken pictures or a video, I'll send it to my electrician or my plumber or whoever it may be and say, hey, this is what's going on. Can you ballpark this for me? You know, and I can give it to my buyer before we even walk out of the house. And then in the other case, I had a transaction going on with an agent who chose not to be a good resource for her buyer and left it up to me on the selling side to figure out how much a repair cost would be. And I mean, that's not necessarily a smart decision if you're on the buying side to leave it up to the selling side to tell you how much something is going to cost. But they did. And so I, again, had my allied partners and resources who could give me figures that I liked and that my seller liked so that we could come up with a solution for that person's buyer. So, but anyway, you have to have a mindset of, you know, let's make a deal and we're going to get this closed. I see it says like, let me help with the cost of that repair and I'll pick up a third of that. And, you know, I feel funny about that, but at the same time, it happens too. And my first mentor in real estate always told me that, would you like zero? I mean, what is it? 100% of nothing or like 90% of something, you know, if you have to give a little in a transaction, because sometimes you might, maybe you have to pick up a home warranty. I don't know. Everything's negotiable. Oh, home warranties. So home warranties alleviate buyers' worries. It doesn't a lot of times. So if you're at a listing appointment and the home is older, the appliances are utilities, things like that, you can always suggest, you know, possibly offering a home warranty because that makes buyers feel warm and fuzzy about a possible future repair. Okay. And on the buying side, let's say it's discovered in an inspection that, you know, maybe the air conditioner is 20 years old, but it's still working. But they'll feel better if there was a home warranty offered. Maybe that's something you can negotiate with the seller, or again, maybe it's something you end up having to pick up. So. What are your best practices for resolving inspection issues? I would say that the best practices for resolving inspection issues, one is to let your buyers and your sellers know there are going to be some issues and what are the possible outcomes to solve them between the two parties, basically, whether or not that is negotiating who's going to repair what, or something is not a big issue and it shouldn't even be asked for in the first place, or can we get a credit for it, or can we just introduce the concept of a home warranty or what? Just be ready with your tool belt of different solutions for negotiating inspection and repair issues. Does anybody else have anything that they want to contribute on inspection and repair issues?
Like you said, Robin, one of the things is that I always put my clients, set the expectation up front, especially if it's on a brand new house, especially if the house that was built, years ago. It's like, hey, we know that there are going to be some things that are going to come up. There's going to be, what we're looking for are structural things that are going to be health or safety concerns that will prevent you from moving into your house. So if you lay out that expectation ahead of time, when the report comes out, it's a lot easier to be able to go through it and then figure out what they should be asking credits for or repairs for. But if you don't lay out an expectation, they're going to want everything that's done, on an inspection report.
Yep.
Can I interject real quick too? Great
Yes.
point, Ubaldo, and great lesson so far, Robin. Thank you so much. I always tell people too, the buyers specifically, like every seller has it's usually my experience has been like it's a number of items they're willing to fix, right? They don't necessarily always look at the cost. They look at like, I'm willing to do 3 things in the back of their mind. And if you ask for 4, you're just being needy or picky. So we need to keep that list as small as possible to the most important things. So if the back of their mind, if they're like, I'll do 4 items and you ask for 3, they feel like they've won. But if they, conversely, if they're like, I'm willing to do 3 or 4 things and you ask for 5, it's like, oh, they're unreasonable. We're not doing anything.
I agree. I find that too.
Yeah.
I look at the page and I always say, oh, that looks too long. That's going to be a problem.
Exactly. And it could only be like $200 worth of stuff, but it's like 7 things, and they're like, no, I'm not doing it.
Right.
So
I want to share, some experiences with this too. We actually started using a few years ago a separate document on the listing side called an inspection rider. That I noticed our contract in Illinois, it has a built-in inspection contingency, and until the most recent iteration of it, there wasn't anywhere in there that you could waive it. So if in order to eliminate the inspection contingency, you had to, number one, eliminate it, and you had to do that by like crossing it out of the contract and getting initials, which obviously resulted in pretty much every single contract coming with an inspection contingency. But then I sold a house that was like out of our area, and it was a different contract form. And it was like a place in the contract where they had initial, yes, I do want an inspection contingency, in which case I've attached the inspection contingency rider, or no, I don't need one. And I was like, oh my God, this is brilliant. Because just that one, instead of an opt-out, it was an opt-in. And I was like, oh my gosh. So we went straight to our attorney and had them draft a similar document for us. And we uploaded with all the disclosures as one PDF. It's with all the disclosures. But here's the thing. It says the exact same, it's verbatim out of the contract. It is the contract inspection contingency language on a separate document, because on the contract, it's like on page 7 in the middle of a 13-page contract that nobody reads. So while it says it's only for major components, while it says it's only, that if they're old but they work, they're okay, people, they never even read that. And if their agent's great, they will have educated them, but I don't control that and I can't predict that. So we put this rider with all of our disclosures now, and it's really interesting what happens. A lot of times it comes back with no mention, initial, oh, by the way, it has all the clauses broken out and they have to initial next to each clause, just like they do on disclosures. Like you read this one in initial, because then they actually read it, right? Instead of one giant block of text, they go, no, they have to initial each clause. And most of the time it comes back with all the disclosures and I'm like, cool, we're good. Sometimes it'll come back and they will have not initialed one of the lines. And I'm like, hey, what's going on here? They didn't initial the part that says blah, blah, blah. And they'll go, well, they're not, they don't agree to that. And like, that's what the contract says. So, it actually doesn't add anything to it. But what you're telling me is that they plan on not following the contract. And they're like, well, no, I didn't say that. But every single time I've had somebody push back on the inspection rider or refuse to submit it, and the seller just, had no other offers and was like, fine, we'll roll with it out of desperation. Literally every single time the contract is ended in a cancellation because of inspection. Every time.
Wow.
So because it doesn't say anything different. The only difference is they have actually read it. And so I'll have agents that give pushback about it, even though it's verbatim. I'll have, they'll say, oh, the attorney said they can't sign that, which all to me means it's a fantastic idea, because what I'm doing is I'm protecting my sellers from a canceled contract and going back to market. It's a bunch of hassle and lifting of hopes that is just ending and crushing their dreams. And I think it's great to be able to not take them down a losing path. And we put that on all of our listings except for the ones that are being sold as is, because it doesn't apply to those. So just a thought, you may have your attorney draft something like that that acts like your contract if yours is an opt-out like ours is.
I think that's a good idea. An inspection rider. Okay, we're gonna move on to funding. So funding, which is your mortgage contingency and cash buyers too. So loan approval and funding. So no matter which side of the deal that you're on, you have to make sure that the buyer uses a reputable and a trustworthy lender. So how do you do that? Are they going to use your lender, or are they using their lender? Okay. Again, having your list of your allied partners to make sure that you have the right lenders to refer your buyer to is essential. And so you send your buyer to your allied partner. Let's say you don't. Let's say they come with their own person. Okay. They come with their own lender. What do? Are you going to just roll with their lender, or is there something else that you can do to reassure that the buyer is really qualified? Outside of you talking to their lender, seeing what kind of loan officer this is, if they're competent, if they actually have gone through all of the documentation and paperwork for the buyer and really have them pre-approved, what else can you do? The other thing that I would do is I would make sure or suggest to my buyer as a backup that they also talk to one of the lenders that I have a relationship with, because you know for sure that your lender has pre-approved and will go through the right process to make sure that the buyer is actually approved. You know, on some listings, you will also see, if you're on the listing side, where the listing agent actually requires the buyers to use their lender just for the pre-approval, not to actually do the loan, but they have to be pre-approved through their lender as well too, because again, that's a reassurance on the seller side that that buyer is actually qualified. Okay. So they can submit parallel applications for backup funding and advise your buyers to keep their credit in good shape. So my lenders always give my buyers a list of do's and don'ts about what to do when they are in the process of obtaining financing to buy a house, but I also send one over as well too. So let's
Can I
talk
throw
about
something in on that real quickly, Robin?
Yes.
So you know how we have our inspection writer? Well, we have an additional lender questionnaire as well. We use this on the list side, but you could also use it on the buy side in the situation you just described. It basically asks specific questions that the lender completes and says, it asks what are their credit scores. Sometimes they'll put them on there, sometimes they won't. Sometimes they will though, and you get to know, are they borderline or not? It asks, did you review their tax returns? Did you review their bank statements? Have you verified employment? Did you submit it to automatic underwriting approval? What was the result? Are they using down payment assistance programs in conjunction with the loan? Which otherwise you might not find out any of that, because a generic prequal, which is where you're going right here, doesn't say any of that. So you don't know. And that could be a garbage pre-approval, especially in today's market. So we actually upload that with the inspection writer and all the disclosures on all of our listings. But if you've got a buyer using a lender that you don't know, your buyer client, if they're using a lender you don't know and they won't, for whatever reason, talk to your lender, you could always have their lender fill out the lender questionnaire and say, did you review this? Did you review that? As opposed to just like, here's a letter that says some stuff.
I think that's brilliant, because what I had been doing is I would get on the phone with those lenders and I have a list of questions that I'm asking them, but it'd been so much easier if I just sent over a form and
they signed it.
Yes,
You know?
and they signed it.
They're not going to put their, you know, their signature on something if that they otherwise might kind of BS to you on the phone. So,
Yeah.
I've had a lot of slack from getting any type of credit report. I shouldn't say credit report, I'm sorry, but what a credit score would be. I mean, they're telling me immediately, they're saying, hey, that's private information, we're not going to share that with you. And maybe rightfully so, but I mean, it's a great idea to try and get an idea of whether you're dealing with somebody who's got a 580 or 590 versus someone who's a 780, right?
Yeah. And I never push back when they send it in without the credit scores filled out, because frankly, I don't think we can actually like make them do that. Now we do have the buyer signs the form before they send it to the lender, which, you know, is saying, yes, you can release this information. Technically all of it's private, but I don't push back on that simply because I'm not most concerned about that. What I'm most concerned about is, did you verify did you look at their tax returns?
Yeah.
And did you look at their bank statements? Because those are where problems come up more often than not. And it's usually tax returns. That's the number one thing on that questionnaire. If they haven't looked at tax returns, I'm looking at that in a very skeptical way. So I'm willing to share the inspection writer that we have and the lender questionnaire that we have with anybody. Although you need your attorney to look over the inspection writer, because that's a contract addendum and you can't just attach that to anything.
And how would you share that? Do they need to request that from you?
You know, I can upload the files. I can upload a file to the chat in here. So I'll do that. I'll upload them both there.
All right. Thank you.
In a couple of minutes, I'll get them up.
Okay. And exactly what Alex and Bill were talking about in regards to whether a buyer is pre-qualified versus pre-approved. Pre-qualified means that when you get letters from a pre-qualified buyer, it just means that they just had a conversation with the lender and said, I make this much, and this is how long I've been doing it. That's it. There's no verification of any documentation whatsoever. So pre-approved buyers, which I typically put in my listings, pre-approved buyers only, don't give me a pre-qualification letter, give me a pre-approval letter, means that the lender has gone over documentation for that buyer, meaning they looked at tax returns, bank statements, and pay stubs. And I tell my own buyers, hey, every lender is going to ask you for these basic things: last 2 years of tax returns, last 60 days of bank statements, last 30 days of pay stubs. This is the basic thing you need to have for the lender to start the pre-approval process. Okay. And then the 10 commandments for a loan application. So after someone is applying or going through the loan process, what not to do, about not changing jobs, buying cars, charging things. I had a buyer, he had his 10 commandments. He knew what not to do. And yet the 2 days before closing, when the lender does do a soft pull on your credit report, before you close, they bought a $2,000 guitar, which totally changed his debt to income ratio. So, you know, we had to, and I had to luckily have a good,
things.
Yes, of all
A
things.
guitar,
Yes.
Wow. That's awesome.
What a
So
knucklehead.
luckily I had a good relationship and had fostered a good relationship with the co-op agent, explained to them what was going on, and was able to get them to wait. And they waited for 2 weeks so that we can get qualified again to actually close. Okay. And then, you know, not spending money that they've set aside for closing. Cash too. When you have business owners who deal with cash a lot and how they put money into their accounts or move money around and stuff like that, all that stuff needs to always be reviewed and talked about with your buyers. I had someone buy furniture. They bought furniture right before, was that the day of? The day of closing. They bought furniture the day of closing and didn't have enough money to come to the closing table with. So again, had a great relationship with the other co-op agent and was able to get that worked out. So then they will wait, but you know, the conversation with that buyer is just like, please don't buy furniture, because if you don't have a house for it to go into, there's nothing that you can do with that furniture, you know. And then not to make large deposits. That's the cash thing in their bank accounts, changing bank accounts, or co-signing anything for anyone else. That's another thing. That's a big thing. Sometimes people think they can sign for someone else. No, don't. So just go over those things. Don't rely on the lender to give that information to your buyers. Make sure you also go over it with them as well. What financing problems have you encountered? What do you do to avoid funding? One of the things too right now, because the mortgage industry is changing on a daily basis, as we just went over all financing with Anita just went over, was that 2 tactics ago, about mortgage financing. There's just so much changing in the industry, and the scores change, the programs change that were available and no longer available. So you have to stay on top of what's going on in the industry, talking to your loan officers constantly, who should be keeping you aware of what kind of changes are happening in the industry, and helping you from a agent standpoint in what's making sure you are a market expert with interest rates and loan programs as well too. Anybody else have anything to offer for financing problems or avoiding funding problems?
I think that if you have a conversation with your clients, letting them know, hey, situations are changing daily, you're working with a great lender, we'll keep you updated, but you know, there can be some bumps in the road and we'll handle them as they come. And just, again, having the conversation with them, letting them know up front that you're gonna hold their hand and be with them every step of the way. But again, just, so if there is a bump, if there is a surprise, they're not so surprised.
Yeah. Yeah.
And make sure that, like you said before, Robin, make sure you're building relationships with your vendors, with your business partners, your lenders particularly. Make sure that your lender is very good with communication and is keeping your buyers up to date and yourself as well, so that you know what things might come up that might be an issue, so that you can avoid, you know, not coming to the closing table. So a good lender will keep you updated with the things that are going on day to day, and as well communicating with the client back and forth.
Totally agree. I happen to have, you know, really good lenders who keep me up to date, like on a weekly basis. I can bet on it. I know what time that email's coming out every Tuesday, you know, without a doubt. And they're going to tell me what's going on with each client, if there's more than one that's going on, and where we are in that loan process. And then keep in mind, if you're on the seller side too, you know, well, the seller side, you don't know really what's going on with a buyer, you know? So you have to check in with the other side on a regular basis as well too, if they're not communicating with the selling side of the process as well too. It's like you have to be hyper vigilant over the transaction basically. So if you have not been used to talking to your lenders on at least a weekly basis, implement that. You initiate the phone calls if they're not initiating phone calls and or emails. Or if you feel like you need to know a little bit more frequently, then you initiate that conversation. Maybe it's twice a week versus once a week, you know, to find out what's going on in the process too. Then we're moving on to appraisals. We're gonna take a break, I think, after we get through appraisals, okay? So in the appraisal process, which is another possibility of what's going to happen and what you should explain to your buyer, not only should your lender talk about appraisals and what's going to happen, but you should be talking to your buyer and your seller about appraising the property. So you've done a CMA for your buyer, you've done a CMA for your seller, and your job is to make sure that either the property meets the contract purchase price if you're the listing agent. You have a big job as a listing agent to make sure the property meets the contract listing price. So hopefully you actually did do a CMA and didn't pull the number out of the air from anywhere about what the listing price is on the property. And part of being proactive with an appraiser is actually meeting an appraiser. Oh, I did that. Do a CMA, list the house at an appropriate price, and make sure that the appraisal, to have an appraisal done if you didn't have any comps done, you know? So if you didn't have a comps, maybe it was something that was difficult for you to comp out, that maybe you might suggest to your sellers to actually do an appraisal. One thing you can also do too in regards to shoring up your skills, especially because it's free right now through NAR, is the Pricing Strategy Advisor Certification, which is a class that you can take on actually doing CMAs for your clients. It's free, 6 hours of CE. So low appraisals for buyers and funding options. So if the appraiser comes in, the appraisal comes in low, which is happening right now with somebody who I talked to yesterday, right? The appraisal comes in low, and if you've had a conversation with your buyer beforehand, let's say you've already told them, if it does not meet the contract purchase price, then here are the options, basically. That either there's additional down payment money from the buyer. Maybe they really, really want it. Maybe they have the cash to bring to the table. Don't know. Financial gift for parents or family, a second mortgage, or maybe the seller is going to be creative and offer some options in regards to financing the additional amount. So those are options. Very rarely have I ever had that happen where a buyer said, I don't care, I want it anyway, so I'm going to make up the difference one way or the other. In most cases, it would be going back to the seller and seeing if they're going to agree to the appraisal price, the appraised purchase price. If it's an FHA or VA loan, we already have a mandatory clause that goes along with the contract stating that the property has to appraise out at the purchase price, or they're not funding it, basically. So those are the conversations that you have to have. The one that I just thought of that I had a conversation with yesterday, someone, they had an FHA buyer and they needed to explain to this listing agent that the appraisal came in low, that even if they're not going to accept this deal, that the appraisal still stays with the property for another 6 months. So, and in that particular area where the house was for sale, more than likely the next buyer would also be an FHA buyer. So they needed to decide whether or not that's something they want to start all over with and end up in the same space, or accept the lower appraisal price and roll with it and sell the property. So on the listing agent side, I think I was talking about that, but I thought there was a slide about it in regards to meeting with the appraiser. I think it's important to meet with an appraiser and at least offer them highlights, is what I called it, of the property. So any kind of improvements that have been done in the last 5 years is what they care about. That helps. And then I give them comps all the time, and they take them. What happened recently because of COVID now, the appraisers aren't necessarily going into the house anymore. So they're just doing a drive-by appraisal. So what I immediately did then is call and say, hey, I still need the contact information for the appraiser so I can send them the update so they'll know about what's updated in the house. And I still send my whole package of updates and comps to the appraiser. Okay.
Robin, you got a question here. Do you see that?
No.
I don't know if you can see. Ty asked if there's a low appraisal, can you get a second opinion?
You can. So the person who's supposed to ask for the second opinion is the listing agent. So What happens is the appraisal comes in low. You're the listing agent. You don't agree with it. You contact the buyer's mortgage company and you let them know you disagree in writing. Do that in writing. I disagree with the appraisal, and you are requesting it to be reconsidered by the appraiser. And so I've never had anyone say, no, we're not going to reconsider it. They typically say, send me what you got. Show me what you have that you're saying that it should be appraised at a higher price. And so you better be ready as a listing agent with your comps to send over and your justification. So yeah, you can.
I wanted to add something, Robin. This is Chantel. I actually was in a situation where the appraisal came back $6,000 lower than the contract price, and it worked out. Oh, it worked out perfectly because they were willing to split the difference. So the buyer and the seller split the difference, and the transaction was able to keep moving.
That's good. So the seller assisted basically by at least making
It
up
was like
half of the difference.
$3,300 they split. And so everybody walked away happy.
That's good. Yeah, it's a win-win. Yeah, that's the goal.
Yeah.
What appraisal problems have you encountered or heard about in your area? How can these problems be avoided? That's it. It's usually the low appraisal. There's usually an issue. I can't think of another appraisal issue.
Sometimes condition on FHA, peeling paint, especially in the winter, weather permitting.
Yeah,
Sometimes we have to have an escrow, like a repair escrow account set up with either the title company.
That's right. I have one right now. I have a VA buyer, and I'm expecting there to be conditions on the appraisal that the sellers in this case, because I already saw it, I could see it. When you're showing the property, you know whether or not this property is going to qualify for FHA at VA, or you need to know those guidelines actually if you don't know them. And even though the property was being sold as is, what we did was we asked the seller, because they are accepting a buyer who's VA, would they be willing to do whatever it was that the appraiser said needed to be done as a condition. And they did agree to that. So that's where we are with that one. And sometimes for us who are in weather-related areas where we can't get things done, chipping, peeling paint in the wintertime is still not going to stick. Yeah, you have to do an escrow.
Well, Robin, this is David. By the way, you're doing a phenomenal job. I super appreciate you. Would you say that in your experience where you've had 30-degree weather and there was conditions, that if you built a strong relationship with the appraiser, that you can overcome those things by doing temporary fixes that are, obviously depending on, like, it may change tomorrow if the weather snaps, kind of a scenario. Do you find success in building a relationship with an appraiser in that way when it comes to VA and FHA? I'm just curious.
So because we don't, unless when you're the listing agent, you get to, have contact, of course, with the appraiser, because you can go meet them and things like that. And I typically always get what I want if I can meet the person. So yes, but we don't have long-term relationships necessarily with our appraisers because it is chosen by the lender and and they don't even choose who it is. It's usually a company that they utilize, and that company sends out an appraiser. That's it. But yeah, being nice.
So case by case.
Yes, being nice to the appraiser, talking to them, asking great questions is always helpful, and being respectful of their job and the role they play is a big deal, and I find that they treat you well in most cases. Okay. Just ask Snow.
I was just going to say, can you bring Snow with you to meet the appraisers? That would really be unfair.
Right.
Yeah, but as a listing agent, if you know your property, I mean, like you said, Robin, we know things that might come up as an FHA or VA problem. As a listing agent, if you're proactive, especially around us where the weather's so bad most of the year, if you're proactive and you take care of most items and you meet the appraiser there and you let them know, hey, I know that, this is going on, but it's 25 degrees outside and we put the ratings in and we did what we could. The appraisers tend to be more willing to work with you if you are showing that you're being proactive and you understand what they need to do and you understand the guidelines and you understand the environment that you're in. They tend to work with you. But if you just let it go and you just let them come in and go, they're just going to give you a report and you're going to live with it.
Yeah, live with it. Does anybody else have any questions or anything like that about appraisals? Because we're going to just take a brief break and before we go into communication, which was like the last part of, we're just going to do like maybe 5 minutes. Yeah, I don't know if we need, what it is. Yeah, about 5 minutes, do about a 5-minute break. So let's like come back. Let's do 8 minutes actually, 2:10. Okay.
And you
All
got it.
right. Thanks.
Yeah.
Running.
Hello, everybody.
Eva, you've been like quiet lately. Where have you been?
Man, I have been so busy and so messed up. I just had to be a little quiet, Ubaldo. Yes.
Ubaldo, I said the same thing. I called her today, like, Eva, are you on the calls? Because I never heard you.
Yeah, she's on my team, and I've been texting her, and she's been like a low key, and I'm like, "What's going on, Miss Eva? I know you tend to,
man.
you tend to overwork yourself. I don't want you to burn out."
Man.
Low key?
Yeah, she's been really low key, not usually low key.
Y'all don't know. I have been so busy. Today, I had to actually take a break and just turn my brain off. And
We all
then my
need that once in a
grandson
while.
came back, so I had to fix a place for him to go to school.
Okay.
So,
Yeah.
but everything is good. I've been in negotiations. Hopefully I can get this deal to work and we can close. I'm feeling the shift right now that Rodman talked about where the appraisal came back lower, and it's a frightening mess.
You know what? And it's gonna get a little bit shakier. I mean, I just did 3 VPOs this morning
I
because
want to talk to you about that.
The banks are doing more and more VPOs because they want second and third opinions, and you guys have to get on your A game and be present because it's gonna get really tight out there.
Yeah, and I do the keys for cash as a notary, and let me tell you, this market is tough.
Sure is.
They giving stuff back left and right. They're offering it more.
Yeah, I know Mark and David covered, short sales and REO properties, and it's going to get very real with some of this stuff if Illinois doesn't open back up soon.
Yeah, and they're talking about another 6 to 8 weeks.
Yeah, so I mean that's a big difference, 6 weeks.
Yeah, that's a lot of difference.
It could break somebody's bank, because some people don't have more than 30 days worth of income in their bank. So if that,
man.
So, and the banks are not forgiving your payments; they're furloughing it for a couple of months, which means in a couple of months all that money is due, and guess what's going to happen, right?
Yeah, and you have to qualify for them to put it on the end. That's what I just did with my mortgage.
I was just about to ask that because it's been forbearance and then there are deferments. So are banks deferring them, putting them at the end?
Yes,
of the loan?
If you credit qualify for it, Chantel, they'll put it at the end. But you have to pay the interest and your escrow and your taxes and insurance.
So they'll put the mortgage, but you'll be responsible for the escrow.
Yes, ma'am.
Yeah.
And in some cases, you have to come up with that money first before they'll approve it.
My bank was really good, so I did that. And I was just on the phone with my credit cards because they're like, look, I'm like, look, I need to defer some of these payments until I get some work coming in, you know.
Yeah. The key is to be proactive, just like in anything else. You got to be proactive and get to them before they call you.
Yeah.
If you wait for them to call you, you are now in trouble.
Yeah. Oh no.
So call them before they call you, and they'll work with you because they don't want to lose your business. I mean, you're their piggy bank. I mean, if you, all that interest you pay on credit cards, I mean, they don't want to lose that. Come on now.
Yeah. Yeah. And then my refrigerator went out.
It's like the saying goes, right? When it rains, it pours.
Baby. I said, what the world is going on? But I really appreciate you, Chantel, calling and checking on me.
You're welcome.
You're welcome. Lord.
I actually experienced the second portion on what Robin was talking about with the inspection of multi-unit is in Cicero, and the village has to come out, and the agent was like literally dragging her feet, and then I finally said, you're not being proactive enough. So we're like 30 days in, and we're just getting the inspection done by the village. It's been like pulling teeth, but they are moving a little bit quicker now. But it was tough.
How about the other broker that I was working with didn't want to tell her seller that the appraisal came back at 95.
You know what that is, right?
Man, we went back and forth for a week and a day.
Yeah, they don't want to tell them because they promised them they were going to make a certain amount of money.
Man, and she was going back and forth, even questioning my lender, trying to go over the lender's head. It was crazy.
Yeah, that's why you never promise anything, because man, then if something like that happens, you got to go with your tail between your legs, and you have no choice but to eat it up.
Yeah.
But you know what, you bought? I've been wanting to do the BP. I started off in this business because I wanted to do BPOs.
Oh, girl, you don't want to do that.
I used to do them. Well, they don't call them BPOs in the notary world. They call them comprehensive views. Yeah. And I do them as a notary, but I want to do them as a broker.
Oh my gosh, no, you don't. You don't know.
I knew somebody at Prospect Equities. That's all they did was BPOs.
You know what? When I first got in the business, right before the crash in 07, end of 06, BPOs was a good business. That's how I got into REOs in the market.
That's when she was doing it. Yes.
Yeah, that's when it was really good.
05 and 04, I was with a couple of companies, and all I did. So my ex-team member that when I was my other brokerage, she handled all the residential brokerage, the residential stuff, and I would just come in on stuff that needed to be interpreting, like Spanish-speaking clients. Other than that, my entire business was BPOs. But when the market tanked in 07, I mean, I went from making $150 a BPO to they didn't want to pay me anything in some cases.
Right.
Dang.
So that's how my REO business started, though, because I started bartering. Okay, I'll do the BPO for free, but I want the listing if it goes on the market.
Right.
So I built a relationship with the ResNet. I built a relationship with Aquin, small banks here in the area. So Fifth Third Bank, which I totally hate. LaSalle Bank before they went to Bank of America. So stuff like that. So I went, I started bartering okay, I'll do your BPOs, but I need something in return if you want to pay me.
And I work with a lot of the BPO companies now as a notary on the notary side doing the keys for cash. So I've been negotiating with them because I want to try to build that part of the side of my business. I think that would be a good thing. And I'm already an agent with them.
Yeah, I used to like it because it was a single form for all BPOs, and it was simple. I had a simple BPO form. I filled it out. I sent it in, took my pictures, did what I needed to do. But then it got all complicated. ResNet has their own form. Equator had their own form. Bank of America wanted their own form. It was just oh my gosh, you guys are killing me. It's not fun. I'm not. I do it because I have relationships with these people, and I know the business is coming back, and I'm the first in line.
Okay, it's 2:10.
All right.
So we're back. And I was just reading through the chat on some of the things, so I saw about the, no bribing the appraiser. That's, frowned upon.
Yeah. Robin, I was just sharing with you, Baldo, how I'm going back and forth. You were talking about the appraiser coming in low and how I've been going back and forth, and this other broker, she's done some unethical things in this whole process, which is amazing to me. And even going back and trying to exchange the square footage of the property because she wasn't happy with the appraisal. I mean, it's just nutty stuff.
Yeah. Like the MLS has any influence really over where the appraiser is really pulling their square footage information from. So
yeah, she's been trying to go over my lender's head who asked question who he is. It's craziness.
Okay.
Anyway, sorry.
Back on, so on to communication. So here are your key players in communicating through our transactions, right? So we have escrow officers, and I think that would be California and Indiana. We work through attorneys primarily here who talk to our title companies in Illinois. Your lender, your appraiser, the real estate attorneys or lawyers, title company, the other real estate agent, your co-op broker, that's a big deal, buyers and your sellers. So you have to over communicate with all of these players and have or set the same expectation for them to communicate with you at an acceptable level as well throughout the process, okay? And we've got title searches to go through. We've got attorney modifications that are happening, and how everything is worded, how it's communicated, all of that stuff makes a huge difference, you know? Are there any like liens or anything like that that are found on title, and clearing any kind of encumbrances? That's what our attorneys are for in this state. And I guess for Indiana and California, you work through the escrow officers directly in regards to looking at title and clearing anything.
Both actually, but escrow is our main point of contact.
Okay. So with your escrow officer, you're staying in communication as soon as the contract is signed, and surveys and your vendors. So avoid misunderstandings and differing expectations. Like I said, you do need to set the expectations. For me, setting expectations is about the level of communication I'm expecting. And especially when something is wrong. Just as much as I want to know when it's right, I want to know when something is wrong, so that we can get that addressed as quickly as possible. Ask questions, get everything in writing. When I'm talking to people and reiterating things, that I always send an email as a follow-up that says per our conversation, whatever it was, just so that we are on the same page. And, you know, communicate clear and often as a given. With your, let's see, we did escrow offers, lenders, we did appraisers, real estate attorneys, for me are really important in regards to how they're communicating with the other attorney, because a lot of times for us in Illinois, we are strictly working through our attorneys for communicating back and forth in the process. Even when we as co-op agents talk to each other and may come to an understanding or an agreement, we still need to have the attorney put it in writing for us so that everybody's on the same page. And then your buyers and your sellers, making sure they are aware of where we are in the process. So that overview that you gave them in the first place, where are we in the process constantly, so that they know what's going on, what kind of movement has happened this week or not has happened this week, is really important, so everybody feels sure and knows, you know, what's happening. And what is it? Good leaders ask great questions is the best way to, I think, communicate with everyone is asking great questions. That's John Maxwell's book. And then utilizing your checklist as well, or your task list if you've put it into command, so that you are checking off each and every step along the way of the process. So when you're gathering your information for your seller's financial situation, you want to know when the property was purchased, what is owed on the loan, and how much the seller owes the lender, whether there's a second mortgage. So this is part of that listing appointment, part of the questions that you ask. If you just go through the listing appointment sheet, prescribed scripts that we already have for you, we teach in Ignite, you know, to just ask those questions to your seller. These are the questions that you're going to ask them. You're going to ask them to have a mortgage statement, most recent mortgage statement at the listing appointment available too, so you can also see that information. I have gotten to closing, I'm on the buying side, and find out that the listing agent, the attorney even, had not actually gotten a payoff yet for the seller or looked at their mortgage statement. And it turns out that they actually have to bring money to the closing, which they weren't expecting, and don't have it to do. And so we didn't close. And there are a bunch of course, other legal things that can happen after that. But to avoid those situations, then you need to make sure you're asking for that kind of information from your seller at your listing appointment. So I don't know how to stop that, sorry. So yeah, don't assume that the seller's agent has asked all those questions already, because this was a very experienced agent who was on the other side of this deal. So it was something that I assumed they had already asked those questions of the seller. It turned out they hadn't. So, and now I make it a practice to just ask flat out the other agent, if they're the listing agent, have they actually looked at the most recent mortgage statement or had a payoff or anything like that from their seller, to make sure that our numbers are going to be great or fantastic. Anybody have any questions about that, about communicating?
No, thank you.
Okay. You should look at tax records yourself as well, pull county information, do all the research you would normally do anyway on a seller. I do it even on the buying side too, because sometimes, you know, I'm doing it because I want to see what we're going to offer. So just do some research, okay? If the property is a short sale, that's important, because we're going to have more and more distressed properties that are going to be coming onto the market. If the property is a short sale, you want to find out, the first question out of your mouth should be, when you're contacting the listing agent, if you are not the listing agent, is to find out where they are in the process of their short sale process. Have they even spoken to the lender yet? Have the seller put in their, submitted their financials, their hardship letter, all this other stuff yet to their lender, to find out where they are exactly in the process of the short sale, so you can kind of gauge how long it might take to get a response from the lender once you go under contract or make an offer on a property that's a short sale property. And if you are the listing agent and you know that it's going to be a short sale because you have asked how much do you owe on this property, you've looked at the mortgage statement, so you know that, oh, this is going to be short based upon what the comps are supporting for the price now. We're going to have to do a short sale. Hopefully you have connected with, and one of your allied partners is a fantastic short sale attorney for us. I don't have time to negotiate with the negotiator on the short sale side. That is not what I do as a real estate agent, but I do have a fantastic short sale attorney who specializes in short sales, so that I can make sure that my seller is in the best hands possible in getting their short sale approved and getting all the documentation over to that lender, where that attorney already has great relationships with the negotiators in most of those lending institutions or servicers. Okay. And that's all I can think about on as far as the seller's financial situation and making sure it's ready. Okay. So the bottom line is communicate often with all your key people, all of your people that are key to the transaction, and spend a lot more time than you normally would with your client, whether that's your buyer or your seller, and checking in with them, where they are in their headspace, making sure you're managing their expectations and reminding them of why what they're doing is a good thing for them or moving ahead, okay? Handle or closely oversee the contract to close process, which that means checking in with all those parties on a very regular basis. And anticipate any problems and take preventative action to avoid them. Like, for instance, where I said, hey, I had a buyer, he's a VA buyer, he wants this house. I can see right off there's some things that are going to need to be done. And I knew the house was being sold as is. So one of the things I negotiated up front was, hey, I know you're selling the house as is, but when the appraiser comes and they're going to flag some things that they want done by the, per VA guidelines, are you willing to do those? And they said yes. So, try to be as proactive as possible throughout the process, and understand your mindset of your buyers and your sellers and their uncertainty. They're looking for you to be their expert, which you are. You've done all the research, you're looking at properties constantly, you know what's on the market, what's going off the market. We post that every day in our private Facebook pages. Kiki does. So you post it every day so we know what's going on in our markets, and so they're looking for you to speak to them. All of this matters, and the way that you speak to your clients, your confidence level, and what you're saying to your client, and guiding them through this process that you do on a very frequent basis that they don't do that often. And look for creative solutions. I think Chantel gave a really good example of where it was a win-win, where the seller came up a little bit and the buyer was also able to make up a difference so they could come together on an appraisal that came up short. So look for some creative solutions to make things work. And don't give up. Like, when something, a hurdle occurs, the immediate reaction for me is always like, okay, so what's the solution? Let me see how I can work around this. Not about giving up, okay? We're not doing career growth initiative or that. Developing an action plan. So hopefully you've gotten some things out of this, especially to me, I think like, a checklist, vendors, making sure you have the right vendors or allied partners for every different type of scenario and situation. And that includes from the plumber all the way to the lender to make a transaction happen. I keep seeing the orange. Is somebody asking a question? Oh, okay. And making sure that your skill set stays sharp as well too, so that you're on top of the market. Increasing your leadership skills, that has a lot to do with how you're talking to your clients and how you are talking to yourself too, what you're saying to yourself. Self-talk is really, really important. So those are the most important things I think about bulletproofing a transaction. Does anybody have like any questions, thoughts, ideas, suggestions, or anything they'd like to share before we are done today?
If they don't, I'm just going to say thank you very much
Okay.
for covering that in thorough fashion and giving us the sage advice.
Yes, this is my compliant advice on everything.
That was awesome, Robin. Seriously, a lot of great information today.
Okay.
For sure.
Very good, Rob. Thanks very much.
Okay. All right. Great. Thank you guys
Thank you.
with me and listening and participating too. I appreciate it.
Thank
All
you.
right. Thanks a lot, Robin.
Have a good night.
Thank you, Robin.
Thanks, Robin.